It's Accountech Bytes, your riveting rendezvous with the latest trends from the world of accounting technology with me, Tom Herbert. Thank you very much for tuning in. And as always, if you find this useful, please remember to like, subscribe, or follow. Let's get straight into the news. And we start with Financial Times research that found the Big Four have posted more job ads for AI specialists than auditors last year. So roles requiring AI skills made up almost 7% of job postings by Deloitte, EY, KPMG, and PwC in English-speaking countries in 2025. Here's a graphic from the research showing the inflection point between AI and audit jobs, with a handy line to show us when ChatGPT launched. Is it the figure excludes trainee and intern roles? You could argue that trainees spend quite a bit of time working in audit. Anyway, the article talks about AI's threat to remove the need for some junior roles and upend the industry's traditional pyramid structure, where a smaller number of partners and senior managers oversee vast layers of less experienced staff. Friend of the show, Ian Pay from ICAW, makes a sensible comment saying that when we talk about the investment big firms are making in AI, a lot of it actually is in recruiting people to support its use. In many cases, audit departments are still growing, but the majority of additional roles are more of a technology and AI focus. Another bit of Big Four AI crossover news now, and KPMG has announced it will embed large language model Claude on a platform that will house the majority of its non-audit services, so global tax and advisory. So KPMG hopes it'll make its tax and consulting services faster moving and more efficient, and the deal marks the first time that Anthropic, the parent company of Claude, has integrated its tools on a Big Four tax platform. What will it do? Well, apparently employees and clients will be able to use Claude to create materials, build agents, and summarize documents. So far, so uninspiring. KPMG says it expects significant time savings as tasks that used to take weeks, such as building a tool to adjust to new tax rules, will be done in minutes.
Right.
Let's hope they're done accurately, though. Let's take a look at the next story. So fellow Big Four firm EY has had to retract a cybersecurity report that was found to be packed with AI hallucinations, what you and I might call mistakes. So the study, which was used by EY consultants in Canada to market their cybersecurity services, was found by GPT-0, an AI content detector, to have more than 70% of its references either with broken links or fabricated AI misunderstandings. So the report was littered with fake citations attributed to news outlets like Forbes, McKinsey, Gartner, TechCrunch, and Wired. Nothing from Accounting Web. According to the Financial Times, EY Canada have now removed the study from its website and is apparently reviewing the circumstances that led to its publication. Jagging back to Anthropic now, and shortly after I released the last video, quick side note, apologies, it was released a day early. That did seem to spook people and I got some complaints, so apologies, it's back to Thursday morning. Anyway, Anthropic introduced what it's calling Claude for Small Business. I have no idea what this image is meant to represent. Feels like a hallucination to me. Anyway, Simon Taylor says Claude for Small Business plugs into the likes of QuickBooks, PayPal, Google, and Microsoft, where apparently it can run payroll, chase invoices, close the month, run campaigns, and route contracts at no extra charge, perhaps at the cost of peace of mind, but we'll see. As friend of the show, Billy McLaughlin sensibly points out, if you or your clients are any pro or max plan, then check your privacy settings in Claude before connecting any financial data. Data training is on by default on these plans. A little bit of people news, and Sage has appointed a new chief product officer and a chief strategy officer, both of whom will be based in the company's San Jose office. This is a shifting of the center of gravity for the big green Geordie accounting machine. And congratulations to friend of the show, Sam Horner, who's been appointed head of accounting partnerships for pensions tech company Penfold. And finally, on the news front, after 7 years in the UK market, Swedish cloud accounting system Bokio has announced it is pulling the plug on its UK operations and will shut down on the 30th of June 2026, after which user data will no longer be available, so best to get downloading. Here's the Accounting Excellence Awards plug, and the now traditional entries extension is now in place. So you now have until the beginning of June to get your entries in for those working in industry, practice, or to highlight the work of outstanding individuals in accountancy. So get your nominations in, accountingexcellence.co.uk for more details. Let's head over to MTD Corner now, where Craig Ogilvie is back from his holidays and straight back into the fray, posting that HMRC now has 315,000 people sign up for its digital tax program, with that August registration deadline moving ever closer. And they've now had 238 end of tax years filed for the 25-26 tax year. And planning ahead, we'll see a big old chunk of downtime for the MTD system from the 12th of June to the 16th. Sticking with the MTD theme, and Jonathan Attow, HMRC's Director General for Strategy and Policy, has written an opinion piece for us about quarterly updates, why they matter, and why, in his opinion, the timing works. So this is addressing concerns about the current deadline of just over 1 month after the end of each quarter and whether that should be extended. According to Attow, this is not something HMRC is considering. He says quarterly updates are not tax returns, and the timeline supports more accurate record keeping. Brighton tax man Nick Paddenberg disagrees, and following on from his article on Accounting Web calling for that quarterly update deadline to be extended from 5 weeks to 3 months, he's now launched a petition with Parliament. Nick argues that the current 5-week deadline creates pressure on taxpayers and agents, increasing reliance on estimates and raising the risk of errors and incomplete records. Here's some research from Sage that states that only 30% of sole traders have a clear understanding of making tax digital for income tax. It states that more than 500,000 UK sole traders could be unprepared for MTD, with just 8% currently using accounting software to manage digital tax records. 18% were more aware of the football transfer deadline day than the upcoming tax reporting changes. Now, I mentioned the year-end tax return. Clearbooks CEO Andrew Garvey has taken to LinkedIn to let us know that Clearbooks has now shipped its 25-26 year-end tax return and has made a couple of filings. Let's get on to some new stuff now, and a bumper crop of updates from Intuit QuickBooks. This one is for UK-based accountants, bookkeepers, and sole traders, and is an MTD for income tax readiness checker. So this scans your data to find duplicate entries or missing transactions, identifies transactions that aren't mapped correctly to HMRC categories, and provides a summary of findings with steps to correct any errors, including the ability to batch update. There's an AI-powered chat feature where you can ask the system questions in natural language, the ability to delegate tasks to the system under your guidance, such as setting up bank connections, detecting anomalies, or running MTD pre-submission checks, and categorizing transactions and flagging anomalies for review. Finally, as teased a couple of months ago, the Intuit Accountant Suite. So the replacement for QuickBooks Online Accountant. This brings together data from your firm and your client data, monitors performance, makes recommendations, and allows you to take action. It's worth noting that there are 2 tiers to this. So there's the core free version, and then there's the Accelerate paid for version, which has all the AI bells and whistles. If you're interested in learning more about this, a friend of the show, Aaron Patrick, has put together a comprehensive video on all the features, so do check that out. VAT tool VATCalc has introduced what it's calling VAT Auditor version 2.0. So this brings real-time legislative validation to transactions to prevent VAT errors and audit exposures. Ruben Steenkamp, founder and CEO of bookkeeping tool Briefcase, states that if you're reducing balance depreciation runs forever, you're not following the accounting standards, you're following the software. To wit, they have just shipped reducing balance in briefcase. So you enter the cost, residual and useful life, and they solve for the rate. And finally, indexed solo, the pre-accounting tools MTD product, you can now update the quarterly period type and accounting method for HMRC connected solo income sources directly into Dext and push those changes through to HMRC. Right, that's your lot for today. Thank you very much for watching. As always, if you'd be kind enough to like, subscribe or follow, I'd be extremely grateful. I'll be back next week with another video. Bye for now.